what a day it turned out to be yesterday. That touch and go moment with that 26K mark. And then from there, we simmered down. In fact, quite a steep U-turn that the markets took the minute we hit that 26K level. While, of course, metals were raring to go on the back of China's PBOC moves. Other than that, technology came to the rescue, some of the heavyweights like ONGC, Bharti, etc. But a large part of the market was weighing heavy as well. For instance, banks didn't quite participate in yesterday's leg up. And this morning, the GIFT Nifty once again is indicating a very, very quiet start. But talking about the global setup this morning, the Dow and the S&P both have managed to close in at record highs. Though the US futures are flat and was a percentage move, a very somber one across the boards. But some of the European markets, like the CAC and DAX, have managed to eke out very stupendous gains. And the two-year yield, that's seen a bit of a fall. Of course, the US consumer confidence, that sunk in the month of September. And those really are the data points. The net result, it's going to be once again, I guess, a very quiet start looking at the global setup this morning. Gold, of course, Nikunj, has managed to hit a fresh high once again.
So, Aisha, post-Fed, it's turning out to be quiet, calm, but steady. And that is what you want to see, that there are no large news events which are impacting the market per se. Things are just moving along. They're moving along nicely. It appears that the Fed event, in a sense, has only acted as a trigger. The big event risk is behind us. Now all eyes are on the US jobs data and the CPI data, which becomes the next really moving part right now. So from a market standpoint, this market is periodically getting something or the other from the central bank. First it was Fed, which market reacted to it late. Then it was China. So we are entering into what really could be called as again, it's a repetitive word, the Goldilocks scenario. The difference in this Goldilocks this time is that markets are perhaps leaning more towards India and the huge advantage which China enjoyed when last time interest rates were going down, that seems to be getting nullified again. So you may twist, you may turn, but for an Indian market, which we'll talk about, I guess from a global standpoint, there is just no wrinkle, so to speak.
Yeah, and despite the focus being the Chinese central bank announcing a lot of support measures, you didn't really see too much of a reaction really play out. But for now, that really seems to be the global setup. But yes, as Aisha flagged off yesterday, was interesting in terms of the action that panned out on D Street. We did manage to hit that 26,000 mark, but then we petered off from that level. Nonetheless, the rally has been continuing. So 4 straight days on the trot that we've been comfortably in the green. By the time we wrapped up, it was around 25,940. The broader indices, very minor gains or just about flat is how you can describe it. The small cap index ended with a cut of about 0.5%. Yes, indeed, that China stimulus measure did do a lot for the metal stocks because they were up and about in yesterday's trade, all of them back home. And you did have the banks, as Aisha flagged off, that didn't quite that didn't quite hold out. So the likes of an PNB or an IndusInd Bank, they continued to remain top drags in trade. But Nikunj, given the fact that, yes, we are holding out right now, we did hit the 26,000 mark, seems like there is no sell signal in the market in terms of the way forward.
Yeah, mathematically, you can talk about the importance of whether it is 2600 or 2500, 900. Those are mathematical numbers. Frankly, from a market standpoint, that really does not matter. What really is important for our viewers to understand is that markets, there are two things which are at an all-time high right now, and I'll say it again and we put it out on digital. One is market level and second is pessimism. So in this market, pessimism is at an all-time high and market levels are at an all-time high. And typically when market pessimism is at all-time high, everybody has a view why you should not participate in the market, yet markets are going higher. Then you do not see markets topping out because of technical factors. Globally, things are okay. Pessimism is high. There is no sell signal, and the markets are beautifully rotating, which is that it is no longer that PSU stocks are gaining higher and higher and higher. There is a beautiful sectoral rotation which is at play. So the best way to approach this market is that you benefit from that sectoral rotation. The underlying strength and the direction of the market is higher. And if the underlying strength and the direction of the market is higher, if sectoral rotation is on, that is how you need to, that is what you really need to focus on. So rather than just being on the sidelines and, crying wolf about the correction and valuations, the best way here is that take advantage of the sectoral rotation. The technicals are good, flows are strong, global cues are strong and supportive. So markets are unlikely to correct in a hurry given the kind of circumstances we are with. So the best way is that you take advantage of the sectoral rotation.
Okay, take advantage of the sectoral rotation or then join into the IPO rush. Two more IPOs got the regulator go-ahead last evening, and that's Hyundai as well as Swiggy. Awaited ones were in the pipeline, but these are going to be mega issues. Of course, this is source-based info that we're picking up, that the size for Swiggy is going to be as large as 11,700 crore rupees, and Hyundai, that's going to be, I think, the largest IPO that we've seen in the recent times, to the tune of about 25,000 crore rupees. As close as LIC in 2022, the size thereof was about 21,000 crore rupees. Paytm, of course, was 18,300, and then Coal India back in 2010 was about 15,200. So very, very large IPOs, and it's going to sure have its repercussions on the secondary market as well, because you will see a lot of liquidity dry up.
So Asha, let's look at the history of IPOs. The market topped out when you had something like Reliance Power when it went public. Then you had this market coinciding with a short-term peak that happened when in the first leg Zomato, Paytm and all these fintech and consumer tech companies, they went public. So that was the second time when in 2022 and 2020 to post 2021 when markets actually made a peak. So are we headed there yet? Well, these are sizable IPOs. And why just IPOs? I mean, you've got QIPs, you've got so much of promoter action which is happening that you would say that these IPOs in the near term may just really cap the market free move. Now, the liquidity right now in the market, if you add up everything together, and we don't have a handle on FIs, let's assume FIs don't sell, you're actually getting about 45 to 55,000 crore, all participants put together. So for these IPOs to go through, I don't think there would be a problem. These are not such IPOs, and the current of commitment which is coming in terms of daily liquidity is so large that the IPOs will sail through. What it may do is that the incremental money which was going into buying current stocks, because if fresh flows are coming, either they would buy existing stocks from current investors or they would move into new companies. So the incremental impact of that would be these IPOs will have an impact on the incremental flows which were moving into mid and small cap stocks. But these are IPOs which are large. These are IPOs which in a sense are coming from very good brands, companies which are growing, companies which have a track record. So I don't think in terms of quality you can make a concern. Yes, in terms of size and impact, we've already discussed that the incremental flow when these IPOs are on certainly could get arrested at least into markets. But I don't think this IPO market signal, which is like an old school signal saying that okay, IPO euphoria means market top, I don't think that factor is at play right now, because the excesses are there, but it is not that we are in a euphoric high.
If you like this video, then like, share and subscribe to ET Now.